So I like to make a lot of sport references. So I like to picture Social Security as your financial defense. So just like Patrick Ewing blocking a shot, it's there to help you in unexpected hits that you might receive within retirement. And a quick video on how AARP advocates on your behalf. Hello, I'm Jammie Lyell with AARP, and I just want to take a moment and share how AARP is fighting for you every single day. From the State House to Capitol Hill, we're on the front lines protecting Social Security and Medicare. We're pushing back against proposals to cut benefits or raise the retirement age. And we're making sure lawmakers understand that Social Security isn't just a program, it's a lifeline. And when it comes to Medicare, we're working to lower prescription drug costs and make sure you have the affordable, high-quality care that you deserve. These aren't handouts, they're promises you've earned with every paycheck. And AARP is here to make sure those promises are kept. And if you'd like to stay informed or get involved, visit aarp.org/getinvolved and sign up for our free advocacy newsletter. One voice might get lost in the noise, but when a million of us speak up, Congress listens. So raise your voice and join AARP in making sure we're heard. Thanks for being here today and for standing up for older adults and future generations. Okay. Thank you. Thank you. A little bit about myself. I do have over 10 years of experience in educating on Social Security, retirement planning, and a little bit of psychiatric counseling as well. Can you hear me now? There we go. So, over 10 years of experience in Social Security, education, retirement planning, and a little bit of psychiatric counseling. I'm a PhD candidate for public policy and administration, and I also have my master's in organizational psychology. I'm really dedicated to ensuring communities have access and accurate and timely information and resources within retirement as well. And working at AARP really allows me to educate and also be involved in my community and bring this education that's so well needed when coming to planning for retirement. And I just want to highlight this book. After this presentation, you can go find a Social Security's Dummies book, 5th edition, on Amazon, edited by me as well. And it has a wealth of information that you can use back as a reference guide as well. So our agenda today, what is Social Security for early and delayed payments, Social Security and work, family payments, how to apply. I'll share some resources as well, and also talk about the future of Social Security, which is definitely a popular topic right now. So the basics of Social Security. So Social Security was created after the Great Depression. It is a social insurance. We do pay through it through payroll deductions, known as FICA, F-I-C-A. And you or your spouse must have worked for 10 years to receive Social Security, and I'll go into that in more detail throughout the presentation. It does provide payments for retirees, disabled, and survivors. And it's not designed to be your only source of income, but given this, more than most, 9 out of 10 are relying on it for most of their income in retirement. So I just want to test the knowledge in the room. Given 2026, what do you think the average Social Security payment will be? How many think that is A? 1 hand, 2 hands. How about B? Okay, how about C? Oh, a little even around the room. So if you guess C, that is actually the correct answer. So for 2026, the average Social Security payment is $2,007. I see my camera guy back there haven't got it right. So when can you claim Social Security? You can start as early as age 62, but it does come with some reductions. You will receive a 30% permanent reduction claiming at as early as 62. For retirement age, somewhere between 66 and 67, you'll be able to claim 100% of your Social Security payments with no reduction, and you'll be able to work as much as you want without having to worry about those reductions on your income. If you can wait up to age 70, you'll see those delayed retirement credits. So you can receive up to almost 124% increase within your Social Security payments. And I'll have a chart after this that will show, for my visual learners similar to myself, what that could look like depending on when you wait. But you want to pay attention to the personal factors such as your health, your finances, and how you ultimately want to live within retirement. It is a personal choice that only you can make, but your choice does affect your dependents, such as your spouse, grandchildren, or any others that might outlive you or claim on your Social Security retirement specifically. So 62. Early access, you can start receiving those benefits early, provides income sooner, especially if it's needed. But again, those reduced payments and are permanent for life. And I will discuss the break-even age. I'll have a case study for someone that claimed at 62 versus someone that claimed at 70, and they both made it to age 78, and what that difference really looks like. Again, waiting to your full retirement age, also known as FRA. 100% of those benefits, waiting may pay off in the long run, but you must wait until 66 or 67 to reach your full retirement age. Again, consider your personal factors. And I want to highlight that you must apply for Medicare for turning 65, but if you do have private insurance or insurance through your spouse, you do not have to apply for Medicare at that moment. And again, delaying until age 70, that 124% by waiting until age 70. There are some financial advisors out there that talk about the bridge strategy that you might have heard or seen, that talks about using your 401k or your other savings in an interim as you wait until age 70, since it gives you that guaranteed payment and increase with cost of living adjustments. Is a strategy that you could consider that's out there currently. Again, pay attention to your health, family, and your financial situation if waiting until 70 is an option for you. And as you can see on this chart here on the screen, full retirement age depends on your year of birth on the left. If you're born on or after 1960, your full retirement age is 67. And you see here 1959, 66 and 10 months, and so forth. And this is the chart that I wanted to give for my visual learners. So if you use this example, we're going to assume that this individual full retirement age was 66. They claimed at 66, and they're receiving $1,900 a month in their Social Security payments. Now, if they would have opted to claim at 62, you see they would have received $1,425. But if they were able to wait until 70 and use what they need in the interim, they can receive almost $2,508 monthly or more. Definitely feel free to take a picture. Okay, I don't see any phones out. Oh, I see phones coming out. Okay, looks like everyone got a picture. Oh, one more. There we go. So the case study, Tia and Andre. So imagine two neighbors. Oh, my screen just cut out up here. That's fine. I'll just look at the screen. So imagine two neighbors, Tia and Andre, who are both eligible for Social Security benefits. Tia decided to start her benefits at age 62, which is the earliest possible age. So she receives those reduced payments, but enjoys being able to pursue hobbies and live how she wants to live. But however, by the time she reaches age 78, she realizes that her lifetime benefits are significantly less if she had waited. And we have Andre, on the other hand, who waited until age 70. His benefits, he received larger payouts, but he had to use his savings in an interim. But by age 78, he has received higher monthly payments, and his total benefits have surpassed Tia's, despite starting later. So you can see with using 78 as the break-even age, that it can really make a difference on what you receive if you plan to expect to live a long life. So also pay attention to your family's longevity and the history in your family. If you plan to live through 90 or longer, if that is your goal, that is a great strategy if you can wait until 70 to claim. And I want to talk about the impact of relocation that's been coming up more often on what happens to your Social Security benefits if you relocate to a different state or even a different country. Now, Social Security payments do not change if you move from state to state. There are some states that do tax your Social Security benefits at the state level. New York is not one of them. Now, benefits themselves are federal, so certain aspects such as taxation or SSI, that's supplemental security income, may vary also by state to state. And relocating to a different state does not jeopardize your Social Security payments. But also, if you move to a different country, you can also still receive your Social Security benefits as long as it's not a country that doesn't have an agreement with the United States. And those are usually countries that, I'm looking for the proper word, but countries basically, for example, like Kazakhstan or another country that doesn't have an agreement with the United States. I want to highlight this tool that we have here at AARP, your question and answer tool. You can use this throughout my presentation or after the presentation. You can use this to refer back to. You can type your question in there, because if you have a question, there's a chance 1,000 others have the same exact question. And if you type your question in there, it will give you the answer as a frequently asked question bank. And the great thing about this tool, if you don't find an answer to your question, it's a link at the bottom to send an email to me or my colleagues to ask your personal situation question, and we'll respond to you via email. And you can actually carry on that conversation without having to, within the privacy of the email. So your question and answer tool at answers.aarp.org. Now, family payments I want to get into next. I only have 30 minutes for this presentation, or I would stop for questions really quick, but I will hang back after this presentation for any questions that you may have. So who can collect on your record? Children, spouse, survivors, and also ex-spouse. Now, for children payments, each qualified child may receive monthly payments up to half of your full retirement age, but they must be unmarried and under the age of 18, or 18 and 19 years old and a full-time student up to grade 12, or 18 or older and disabled prior to age 22. There's a lot of ors and buts with Social Security. Spousal payments. Now, spouses can receive up to 50% of the worker's spouse full retirement age payment amount. They can collect higher payment, but not both. So either you will collect your spousal payment or you will claim your own Social Security retirement payment. You cannot double dip. The working spouse must be collecting payments at the time that the spouse wants to claim. Now, you must be married for at least 1 year at the minimum of age 62, and any age if you're caring for a child under 16 or a child with a disability. Ex-spousal payments, a little bit different than spousal payments, so you must be married for at least 10 years. Fun fact, in the United States, the average marriage lasts about 8 years. Yeah. So I do get this question quite often. What if we reach 9 years and 11 months? Social Security is very strict. You have to reach 10 years. You can file at any time, and you're eligible for 50% of the ex-spouse's full retirement age payment. Ex-spouse is at least 62 and receives their own Social Security payment as well. Now, with spousal payment, ex-spousal payment, it is also based on when you claim yourself. So you want to pay attention to your age. You can claim as early as age 62, but it will come with reductions as well. Survivor payments, unfortunately, if your spouse was to predecease you, you can receive 100% of deceased eligible spouse payment. Age 60 is the earliest you can claim, 50 if you're disabled, but it does come with a reduced payment. Yeah, survivor payment, again, is based off of when you claim. So even if your spouse claimed at full retirement age, depending on if you claim at 60 or 67, whichever your full retirement age will affect your payment. You can claim at any time if you're caring for an eligible child or children. And also, dependent parents also can claim survivor payments if they can show that they have received more than 50% of their assistance from their child. And continued. Now, if you're already receiving spousal payments, Social Security would typically switch your payments upon your spouse's death. I always say do your own homework, and if you can receive that certificate of death from the funeral director, send it to Social Security so you're not waiting months and months for that to happen. You can do that also by calling the 1-800 number you see here listed on the screen. In special circumstances, no length of marriage requirement if death was accidental or in the line of U.S. military duty. And remarrying before age 60 or 50, if disabled, affects your eligibility. But if you remarry after 60, you have options. So you can use that. If you have multiple marriages that last 10 years, you will have options to choose which payout is higher. I got a question before. The individual was married 3 times for 10 years each. That can happen. So again, remarry survivor payments. Remarrying before age 60, 50 if disabled. If you remarry, you cannot receive survivor payments while you are married. But if you remarry after 60, 50 if disabled, you will continue to qualify for payments on your deceased spouse's record. And these are some ways that you can apply for your Social Security. The wait time for Social Security in the office, if you want to make a field office appointment, you want to make an appointment. The walk-ins, you can end up waiting for more than 3 hours to get an appointment if you try to walk in. So please make an appointment if you plan to go in to field office. And the reason to go into the field office is if you have special circumstances such as survivor payments, or if you really need real-time answers because your situation is very detailed and have a lot of moving pieces. I want to get into work next. A lot of individuals are claiming Social Security while also working. I want to start with the 2025 Social Security Fairness Act. Now, this repealed the windfall elimination provision, also known as WEP, and also GPO, the government pension offset. Now, this impacted approximately 3 million public sectors, retirees and recipients, such as firefighters, police officers, and teachers. And it is retroactive to January 1st of 2024. So now, if you receive a pension that didn't cover Social Security payments, it used to almost wipe out what you would receive in your benefits. But this is no longer the case. And Social Security has stated that they have completed all payments in regards to this, all lump sums to anyone that was affected by this. Now, you want to pay attention to the cost of living adjustment and wage cap. Social Security payments adjust for each year to account for inflation. You might have seen it just recently in the news. The COLA for 2026 is 2.8%. And also that means the wage cap limits for the amount of FICA taxes have gone up. So the wage cap for 2026 is $184,500. So that means that you pay taxes, FICA taxes, up to this amount. If you make more than this amount, you'll be seeking a refund from your employer. So anyone above making this wage cap does not continue to pay Social Security taxes. And collecting Social Security while working, which is very important to know. If you plan to claim at 62 or before your full retirement age, this applies. So if you're below your full retirement age, $1 is deducted for every $2 earned above the limit. And that limit for 2026 is $24,480. In the year that you reach your full retirement age, let's say you turn 67 next year, then it's a little more lenient. the limit raises to $1 deducted for every $3 earned above the limit. And for 2026, that limit is $65,160. Definitely take pictures if you need to. I see some phones. Now, Social Security credits, you can earn up to 4 credits per year. You can earn them all in the same month if you reach the maximum of what these credits add up to. Now, credits are based on total wages and self-employment income. So in 2025, 1 credit for every $1,810 in covered earnings. So in 2026, that raises to $1,890. So if you can make in 2026 $7,560 within that year, you have earned all the credits that you need for Social Security for the year. You can only earn 4 credits per year. So anything above that does not increase how many credits you've earned. That gets into the 10-year rule, also known as the 40 work credits rule. Now, you need to work for at least 10 years. That adds up to 40 credits for eligibility. And it is different depending on which benefits you claim. Now, for retirement, 40 credits are needed. I know I'm here to talk about retirement, but I still wanted to outline disability as well. Disability is 6 to 20 credits needed depending on your age. And for survivor payments for spouses and children of a deceased person who earned at least 6 credits for survivor payments. And earning maximum credits, maximum of 4 credits per year, that's been in place since 1978. Now, this ensures that 10 years of work regardless of income. Extra credits, again, does not increase your payment amount, but your average salary and earnings over the 35 years determine your monthly payment. Taxes on Social Security. Now, this is what's in place, and I will get into the senior tax credit because I've been seeing a lot of questions about that as well. So the taxes on Social Security, up to 85% of payments may be taxable depending on combined income. So for individual filers for 2025, $25,000 to $34,000, up to 50% may be taxed. Now, if you're above that $34,000, up to 85% of payments may be taxed. A little bit different for joint filers, 32 to 44%, up to 50% of payments may be taxed, but if you go over to 44,000, up to 85% of your taxes, benefits may be taxed. And you can go on the IRS website and ask for voluntary taxes as well to have them take that out. So you won't owe taxes at tax time. Senior tax credit. Now, at age 65 or older, or retired on permanent and total disability with taxable disability income. Now, you must meet income limits based on adjusted gross income and non-taxable benefits. Now, that credit amount is $3,750 to $7,500 non-refundable. And as you see here on the screen, forms and resources, Form 1040 and the 524. You can combine this with standard deduction for seniors, so additional $4,000 under the recent legislation. And payment limits. Now, what is the maximum payment? I get this question a lot. How much can I achieve in my Social Security payments? Now, it does vary based on the age you retire, based off of what we discussed, and it depends on the average amount that you made over 35 years. So it's your retirement age versus your maximum payment will really determine how much you make. So if you retire at age 62 in 2026, the maximum you could receive is $3,082. If you reach your full retirement age next year, the maximum someone could receive is $4,152. But if you can wait until age 70 in 2026, I suppose 2026, would yield a maximum benefit of $5,521. So you can really see the difference, and it can really pay to wait. And again, this is just a summary, calculating those maximum payments. Your full retirement age varies depending on your birth year. Claiming early, such as 62, means less money. Retiring at 70 maximizes your payments. And to receive the highest payout, you want to work for at least 35 years. And you might have a question, I get this also, what happens if I was a lifeguard or something like that early in my career? I didn't make as much as I make now that I'm in my 50s or my 60s. So Social Security takes your highest paid 35 years, so it will knock off one of your lower paid years and replace it with one of your higher earnings. And if you decide to stop working, let's say at 62, and then you do claim at 67, Social Security will still keep your highest 35 paid years. So just because you're not working, that does not change what you will receive. What's going to determine how much you receive is the age at which you claim your Social Security payments. Again, just some summary. Then I wanted to highlight what it was for 2025, since we're coming up on a tax season. That wage cap was $176,100. Again, what that means is if you made over that amount for any reason at all, you will be looking for a refund. And these are ways that you can estimate your Social Security payment. You can open up a My SSA account, very important. You can do a replacement Social Security card, see your Social Security number, change your direct deposit, look at your earnings statement. A lot of things you can do with the My SSA account if you haven't made one already. You can complete the 7004 form, call the 1-800 number. And if you don't have a My SSA account, yes, they still send mailed statements for those 60 plus. And just a little bit about the future of Social Security. I know that's also a hot topic as well. Now, AARP is a bipartisan organization, and we believe any changes to Social Security should be fair and gradual, ultimately, for current and future generations. Congress has a couple of options to help fund Social Security in the future, as you see here. And if you want to learn more about these resources, there are free resources that goes into more detail about this. You can look at the Council for Economic Education and the American Academy of Actuaries. Commonly asked questions. I'm going to do a knowledge. I know I've been up here talking. I know I don't have as much time, but I'm going to check your knowledge to see if everyone was listening, see if I did a decent job. How long do you have to work to qualify for Social Security? Somebody say 3? It is 10 years. Say that again. There you go, there you go. So it uses a system of credits called quarters, and you need 40 quarters, which equals 10 years, to qualify for Social Security benefits. And you can earn these credits by working and paying Social Security taxes on your earnings. So it takes 10 years to earn 40 credits. A little bit of true or false. Is Social Security going broke? I'm going to answer that question ahead of time. So Social Security will not run out of money as long as workers and employers continue to pay payroll taxes. It's a pay-as-you-go system. I pay, you pay, we all pay. Revenue coming in from payroll taxes largely covers the payments going out, but Social Security does face long-term funding challenges. So in about 10 years, I think it's 8 years now, when the reserves are used up, Social Security will have sufficient money coming in to pay only 80% of those earned benefits. So instead of the $2,000, you'll receive $1,800 of what you paid in and what you've earned. Next, members of Congress do not pay into Social Security. That is also false. All members of Congress, the President, Vice President, and most political appointees have been fully covered under the Social Security program starting in January of 1984. All members of Congress, no matter how long they have been in office, have been paying to the system since 1984. How many payments has Social Security missed? Yes, 0 payments. That is one reason why you might see with your financial advisors, if you have them, or when you're talking retirement, why it is suggested in the bridge strategy to use your savings in the interim to maximize your Social Security payments. This is the one guaranteed payment, inflation-protected payment you will receive in retirement. And my next favorite question, what list does Social Security Administration release each year? What? Okay, there we go. Top baby names. Yes, Social Security does release the top baby names. You can go on the website and actually see if your name made that list in the year that you were born. Again, here are some other resources. Please take pictures of these resources that are available to you for free as you go through your Social Security journey. Another resource that's not there listed, it was just released honestly this week. Social Security did, AARP did release a Ask AARP Social Security AI agent. So if you are into AI, we do have an AI agent on our website if you want to ask questions as well and get quick responses. And I want to thank everyone for listening and being here today and listening to me talk for 30 minutes. If you have any questions, I'll be outside if you have any questions regarding your Social Security situation. Thank you. Thank you.